So what would be the thing if there was the biggest opportunity to create wealth right now?
Yeah.
What industry or sector would that be? Is that in this, stocks? I feel like nothing is stable. Like if you're going to put money in something, you could make a lot or you could lose it all within a month. Is it the stocks? Is it the crypto, NFT space? Is it the housing? Is it, investing in yourself in another way? What would you say we should be investing in?
Absolutely. So the answer is going to be looking for where the opportunity happens.
Okay.
So 2008 was
me.
real estate. That was the biggest real estate opportunity in our lifetimes. In 2020, it was stocks and crypto. In 2020, the stock market from its bottom to the end of 2020 grew by 60%. The crypto market grew by almost 600%. And so it's
But if you didn't get out, you've kind of gone back to...
Of course. But this is where, again, the psychology of your investing is so important. But the thing that you want to pay attention to now is it's you want to see where things are going.
Yes.
That way you can make the right moves. Remember, history doesn't repeat itself, but it rhymes.
Yes.
Right? So you want to look at the same data points and the same factors and see what's happening. So
if you could make a prediction of what do you think is going to happen over the next few years, based on history.
Yeah. So
what's rhyming right now?
Yeah.
What's rhyming for you?
So it's going to depend on one thing.
Okay.
It's going to depend on what the Fed does next.
Okay.
Because right now, and I'll explain, and I'll give you a defined answer in just a minute, but I like to give you my reasoning first.
Yeah, give me the context.
So right now, the Fed is working to fight inflation.
But how? It's like 8-9%.
They're raising interest rates, and they're going to start selling off their balance sheet. So the Fed balance sheet is around $9 trillion.
Crazy.
And so starting in June, they're going to start selling off these assets while raising interest rates. And the Fed says that they're willing to fight inflation because the economy is so strong and robust. And because the economy is so strong and it can withstand any sort of interest rate hikes. So what is the Fed doing in essence? They're pulling money out of the economy. And now they're hoping that the economy will continue to stay strong. So by raising interest rates, what's happening? Housing is becoming significantly more expensive. And
housing or rent? Like buying a home or renting?
Both of them.
Yeah.
Rent costs have gone up by 20%. Buying a home has gone up by even more. And I'll tell you why. Because when people talk about home prices, what do they talk about? They say, oh, well, home prices are up 20% from a year ago. But your housing cost is significantly more than 20%, because if 1 year ago you wanted to buy a home for $500,000, you could get a mortgage for 2.5%, 30-year fixed. Now
2.5% mortgage? Oh, wow.
Yeah.
For interest rate.
Interest rate, 30-year fixed.
You put 20% down, right?
So $100,000 down.
Yeah.
You could borrow
2.5%.
$400,000 at 2.5%. It would cost you something between $1,600 and $1,700 a month.
It's not bad.
Today, that home is not $500,000, it's $600,000, 20% more, and your mortgage rate is not 2.5%, maybe 5.5%. So what does that mean? If you put 20% down, you're not putting down $100,000, you're putting down $120,000, and you're not financing $400,000, you're financing $480,000. So you have to borrow more dollars, and then you're borrowing the dollars at a higher interest rate. So you're not borrowing at 2.5%, you're borrowing at 5.5%. So now your mortgage on that same house, the exact same house, assuming no upgrades, has gone from $1,600, $1,700 a month to $2,400, $2,500, $2,600 a month. So your housing cost is significantly higher. So now with interest rates going up, what's happening? People are saying, oh my God, homes are significantly more expensive. Mortgage applications are starting to go down. In the stock market, what's happening? Well, businesses are having higher costs to operate, because now if you were one of the companies that were relying on debt and your stock price in order to operate, because when you're in a low interest rate environment, you don't really need to make money, because investors will keep throwing money at you because they can just keep borrowing money super cheap.
Right.
And so if you were one of those companies that were not profitable, you might have just said, well, I'm worth $40 billion. I don't need to make a profit because I could just borrow money. I can just get an investor to invest money into me. But now people are looking at you and saying, I can't borrow that same money at the same rates as I could before, so I need a better return, and you're not making a profit, so I'd rather invest my money somewhere safer. So a lot of companies are seeing their valuations drop, meaning stock prices are dropping as interest rates go up. Same in the cryptocurrency market. There's a saying that when the tide goes out, you see you swimming naked. What happens? Well, there's a lot of free money out there. There was. And so people could just keep swimming in the free money, throw it into anything, and just hope that they'll make money on it because there's a lot of dumb money out there.
Yeah.
But when that money starts to go away, that's when you see who was swimming naked. That's when you see the scams, you start to see the bad investments, and you start to get exposed because now people want to put their money somewhere safe and somewhere smarter. So people are leaving the risky investments and moving to the smarter places. So now back to your question, where do you go? Where do you put your money? And the reason why it depends on the Fed is because it depends on what the Fed does next. If they continue fighting inflation, and they say, we're going to do whatever it takes to bring inflation down. That means we're going to pull money out of the economy. We're going to jack up interest rates, even if that means that we're going to go into a recession. Even if that means we cause a housing market crash. Even if that means we cause a stock market crash, we're going to keep doing it. If they do that, well, then you're going to have a big buying opportunity in pretty much any asset class, assuming you find a good investment there, a strong fundamental investment. But there's also the chance that the Fed doesn't do that. There's a chance that the Fed says, we're starting to raise interest rates now, and this is what they're doing right now. And then 6 months go by and they say, these higher interest rates are really hurting the economy now. The economy isn't as strong as we thought.
So
the
bring it back down a little bit.
And then they start cutting interest rates. Now what are you doing? You're in a high inflationary environment.
Oh, man.
And now you're creating more inflation in order to fight the economy. Because the Fed can either fight inflation or they can fight the economy. They can only do one or the other. And in all the previous crashes that I talked about, we were never worried about inflation. We were worried about an economic slowdown in 2008. We were worried about an economic slowdown, 2001, economic slowdown. Even in 2020, the worry was not inflation, the worry was deflation.
Right.
The Fed says we can't have deflation. We don't want people to have their savings worth more. We need to create more inflation. And now we have an inflation problem. And so if the economy goes down, what do? You create more inflation to save the economy. However, that creates more inflation. Our economic slowdown today is being caused by inflation. You cannot fix an inflationary recession through more inflation. What's that going to do? It's going to make the inflation problem worse. Yeah, it'll probably boost the economy in the short term, but it will crash the stock market and the real estate market, not downwards, but upwards.
Interesting.
And that's a very interesting concept to think about because when you think about a market crash, what are you thinking? Stock prices go down, real estate prices go down. But if you're worried about high inflation and then you start creating more inflation, what's going to happen? People are going to take the dollars and they're going to want to get out of cash because they're going to say, if our inflation rate goes even higher, our cash is going to lose value even quicker. We want to own any asset, stocks, want to own real estate, maybe cryptocurrencies, some smart ones. You're going to see more cryptocurrencies potentially go under. We've already seen some go under. So you're going to want to make fundamental investments, but you could see just a lot of money flow into these assets, kind of like what we saw happen in 2020. We were in a recession, but the stock market was going upwards.
Right.
Why? The money printer let it all in. So that's where you want to pay attention to what's happening there. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you got to do is click that button right over there. Thank you for watching, and as always, keep hustling.